Hello everyone, welcome to our MasterMatch YouTube channel. I'm really excited because I have opportunity to introduce you a new master who just joined our network, Damian Pawlowski. He's a crypto trader. Damian lived for 10 years in the United States. He started trading in the Forex market 2.5 years ago. And for the past 2 years, he's active on the crypto market. And I must say, since the crypto is a very interesting topic, I'm sure that our listeners would like to learn more from you, Damian. So the first question is, what is crypto investing?
Yes, hello guys. Yes, the cryptocurrency space is very interesting. It's very new, right? So Bitcoin's been around for 8 years, but overall the cryptocurrency space is pretty new. So cryptocurrency investing is a way to protect yourself from inflation. Right now in Poland, the inflation rate is around 8%. So 8% is it's a pretty big percentage when you look at inflation, right? We used to have like 2.5, 3% inflation, which is pretty good. So you invest to protect your capital from inflation. In cryptocurrencies, you look out for good projects that you could invest in, so you could have some type of return. These projects are created in order to solve issues, solve problems, revolutionize the world, help the world achieve something that it couldn't achieve before, right? So Bitcoin, in a way, helped to solve this issue of being able to send money across the world within minutes and having it to be decentralized, meaning there is no central entity that controls it, right? It's the people's currency. People control it. And crypto investing is allocating your capital in projects like that. Yes.
All right. And what platform should we use when we invest in crypto?
Guys, there's many platforms. There's many platforms that you could utilize. There's two types of platforms. You have DEXs, which are decentralized platforms, and you have CEXs, meaning they're centralized platforms. So centralized meaning they're controlled by a body, and decentralized they're not controlled by one body. They're controlled by people. So centralized exchanges are much safer than decentralized exchanges because there's laws in order to protect the consumer from being scammed or being robbed. So some of the centralized exchanges that I use are Zonda, Binance, and Coinbase. Zonda is a good exchange for Polish people, I could say, for people in Poland that like to invest money because you have a lot of crypto pairs with the zloty. So you have, let's say, Bitcoin to zloty, you have Ethereum to zloty. Uh, the fees are pretty low on Zonda. Then you have Binance. Binance offers a lot more. There's a lot more trading pairs. There's trading pairs like Bitcoin to Ethereum, and Binance operates in the dollar. So you need to have the dollar in order to invest in, like on the Binance platform. And then you have the Coinbase, which works kind of like Binance, but Coinbase has a lot higher fees than Binance. So I wouldn't personally recommend it, but I think Coinbase is much safer than Binance. And then you have the decentralized exchanges. So some of decentralized exchanges are Loopring, which is a decentralized exchange that works on Ethereum. It offers very low fees and very quick transactions. We have SushiSwap, which is also an Ethereum platform, and we have a Sunday Swap, which is gonna get released uh, on January 20th, 2022, on Cardano. So those are pretty good exchanges, but they're not safe because they're not centralized. So there is no laws to protect the consumer from potential, risks of getting robbed or scammed.
Interesting. What are different types of cryptocurrencies?
Okay, so different types of cryptocurrencies. There's a lot of cryptocurrencies out there. A lot. There's a lot of projects that are created on a day-to-day basis. I'm gonna talk about the biggest projects. So you have Bitcoin, right? Everyone's heard of Bitcoin by now. Bitcoin uses a proof of work concept. meaning a computer solves a mathematical problem, which then creates a block where we have transactions. So it's a blockchain. It's a ledger that when you have something inputted into ledger, it cannot be taken out, right? So it's very transparent. Um, all the cryptocurrencies are pretty much based off of Bitcoin. That were based off of crypto cryptography, right, which is a mathematical theory. Then we have Ethereum. I always like to compare Ethereum to like a operating system, like Windows and Apple, right, like the OS X. Ethereum allows people to create applications on it. So you could have an application, like a banking application on Ethereum. You could have a lending application on Ethereum. It offers a lot more than Bitcoin, and it still uses the proof of work, but we're in a period that Ethereum wants to go to proof of stake, which is requires a lot less energy in order to create another block. Yeah, so Bitcoin, Ethereum, Cardano is another one, as I mentioned before with the Sunday swap. There's a lot, like when you look at the cryptocurrency market, you have to look at the market capitalization, meaning how much money is in each project throughout the whole market. So Bitcoin is the biggest, it has the highest market capitalization. Then it's Ethereum, then it's the Binance coin, then it's Tether, which is a stable coin. A stable coin is a coin which is pegged 1 to 1 to a currency. So like the Tether USDT is pegged 1 to 1 to a dollar, meaning that if a dollar goes up, USDT is going to go up, and that's how we judge the price of different cryptocurrencies through these stable coins. So yeah.
So Damian, which cryptocurrency is the safest one?
Okay, here we go. The safest cryptocurrency, I must say, it's Bitcoin, right? It's been the longest with us. People trust it because it's been with us for more than 8 years now. It's the original cryptocurrency created by Satoshi Nakamoto. He was the original founder. Nobody knows who he is, but he was the original founder. And I don't know if you remember, but there was this guy that bought 2 pizzas for 2,500 Bitcoin. That's the most expensive pizza in the world, I would say. Very, very, very unlucky. But he was the first guy that initiated the whole trading of Bitcoin. So Bitcoin is the safest because Bitcoin has been with us a lot. Like people know it. Then it's Ethereum because Ethereum offers a lot. As I said, Ethereum is like a platform for building applications on it. So like, then I would say are the stable coins, right? So like Tether. Tether is safe because it's pegged 1 to 1 to a dollar. So yeah.
Mm-hmm. All right. Lastly, I have heard about staking. What is staking?
Okay. Staking is a method. Uh, I always compare it to, I'll give it like an example. I always compare it to a bank. So you go to a bank, you open up a savings account, and that savings account has a percent on it. So let's say it has 1% annual yield on it, and you put $1,000 in there. So within a year, you'll have $10 in the account, right? Because it's only 1%. Staking is the same thing. Staking offers liquidity, meaning money to a project, and in return for that, for your money in the stake, they give you a percent of their cryptocurrency. So it's a passive way to earn income. Just like you go to a bank and you open up a savings account, you passively earn income. Staking is the same thing. With staking, you get to passively earn income through providing liquidity to that project. So that is what staking is. Not a lot of people know about staking. I really recommend people, if you own any cryptocurrency, go and see if you could stake that cryptocurrency because it's free money, right? All you gotta do is provide liquidity.
Okay, so right now, Damian, I can invest in the FX market, stock market, and crypto market. What is the difference between them?
So the difference between crypto market, stock market, Forex market is that stock market is the less volatile of them all, right? Meaning you take the less risk, therefore you will have lesser returns, but it's the least risky. So you're not you will not have a morning where you wake up and all of a sudden your portfolio is minus 55%, right? You'll wake up in the morning and in the stock market your portfolio might be down 2%. With cryptocurrencies, you could have your portfolio down by 55%. We saw that in May 2021, where over a period of 2 weeks, Bitcoin from 64,000 dropped to all the way down to 29 and a half. That was like a 55% drop. I saw my portfolio get halved. Not a nice thing to wake up to, but that's the reality, right? With a lot of risk comes a lot of. You could have a lot of profit, but then you could have a big loss. In Forex, you use leverage, right? Leverage allows you to invest more money than you own in a certain thing, and it's good and bad. It's good because you could have large, quick profits, but it's bad because you can lose a lot of money. You could do the same thing in cryptocurrencies. You could invest in the futures market, and in the cryptocurrencies, it's crazy because you could have up to 125x leverage. So that's very risky, but you could have a lot of return. But I don't recommend anybody with not enough knowledge to even try futures market on Forex or cryptocurrency.
All right, but let's imagine that I'm going to take this risk and I'm going to invest in the crypto. What are different strategies of investment in crypto?
Okay, so a lot of different strategies. My favorite strategy is to invest little sums over time. So let's say you set up a day in a week that you're willing to invest $100, right? So for me, let's say it's Wednesday. So on each Wednesday for the next 3 months, I invest $100. So I invest $100 this Wednesday, $100 next Wednesday, and so on. Let's say the first Wednesday, the price of a coin can be $10. Then the next Wednesday can be $12. Then the Wednesday after that, it's, let's say, $8.50. This allows you to average the price out of the coin. So it's not like you're investing all the money at $10 per coin. You're investing it at different prices, which in return allows you to average out the price. So you get the kind of the best price for your investment. The second type of strategy is, of course, buying the dip. So when the price drops, you invest. But that doesn't mean that the price will go up from that point on. It could still drop more, right? So what you do is you double down on that investment. So if you invested $100 in the first dip and it goes down, then you invest $200 in the second dip. And if it keeps going further down, then you invest 400 and 800 and so on. So you double your investment. And it's a way to protect yourself. It's the way to average out the loss that you take. So within your last investment, when the price goes up, it will go up significantly. Your loss will be zero, right? If it goes up, because you kept investing more and more and more with each dip. And when you invest, it's very important to use stop loss and take profit. Stop loss. So let's say you buy a coin for $100 at a price of $8.50. You can set up a stop loss at around a price of $8 in order to protect you from not taking too big of a loss. So if a price was to drop down to $5 for that coin, well, your contract would close at $8. So you're much safer using stop losses, and then you use take profit to take profit, so you can have some money to use, and so you could have the money returned to you to invest in other projects. And of course, there's the technical analysis part where you analyze candlesticks and the candlestick formations, and there's plenty of candlestick formations out there that you could analyze. We're not going to get into it because we would need a lot more time. But yes, that's what I think the three different strategies for investments are.
I think that crypto investing is a very interesting topic, but you have explained it well and you have shown your expertise on this. Damian, what is the best way we can support you?
The best way you could support me, well, you could definitely expose me and to different other investors, right? Traders that have more knowledge than me or have a completely different point of view at the market than me. Uh, yeah, I think that's a way to support me.
I think that the mastermind about investing would be something cool, right, to develop.
Yeah.
Tell me, what are other ways that you can support people in our community?
Well, currently it's not really official, but currently I have few people that I'm teaching how to invest. So we meet and I explain to them different how the market works, why the prices go up, why the prices go down. I show them few of my strategies for investment. I tell them what books to read, just give them all the information. So I help them not to make the same mistakes that I was making when I started investing. So high fees, investing at the wrong time, using the wrong platform to invest in different coins. So I can give out my knowledge and help people not make the same mistakes as I did. That's the most important.
Of course, it's better to learn on someone else's mistakes than our
Of
own,
course,
right?
of course.
If you would like to receive some help from Damian, please do not hesitate. Visit our platform MasterMatch.online and submit your request for knowledge or service. The platform finds for you relevant connections to people in the network of masters who can share the knowledge or experience with you so that you can save time on research and move quickly with your business objective. Thank you again, Damian, for your time.
Thank you. And remember, MasterMatch, support it, buy it, trade it, just like Bitcoin, do the same thing with this application.
Thank you so much. Bye.
Bye.